What's up, guys? Welcome to another video. We're going to be going over our weekly watch list for this week. Some really good companies that we're going to be watching for kind of a mellow earnings week, as you can see here. A lot of Chinese companies, a lot of retail, and overall, it's just going to be pretty calm. But there are some really good opportunities that we should take a look at for some of these stocks. Namely, we got Salesforce on Wednesday, Snowflake. We also got Dollar General, Dollar Tree, Xpeng, Peloton, and we also have Express, which is also a kind of a risky earnings. So overall, pretty slow week. Not too much is happening, but there are going to be some stocks that we're going to be watching. Peloton is going to be one of them, and we're actually going to be selling some options on Peloton stock in the upcoming week for earnings, because there is some really good opportunities with this stock, as it has seen a really steep sell-off ever since its all-time highs in January of all-time highs of $167 per share. Right now we're sitting at $108 per share. I do think it's a good opportunity to sell some cash geared puts. Remember, during earnings season, you don't want to be buying options, you want to be selling some options, and that's the best way to capitalize on the high implied volatility as well as the higher premiums that's going to be associated with the higher implied volatility. So if we go on to Market Chameleon, we can see that the implied move is going to be 9.6%. And 9.6% roughly of 108, that's a plus or minus $10 movement from the current stock price. So if we go on to the trading view on the daily chart, we can see that there's a really strong support line at this $97 strike. So that is going to be, we want to sell a strike of a cash gear put that is lower than $97 in order to be pretty safe. So let's go over to the options chain, and we can do an expiration either September 3rd or August 27th. I'm going to do the August 27th expiring this week. My plan is to open it on Monday and close it directly after earnings, because remember, after earnings, there's going to be a huge implied volatility crush, which is going to lower the premiums of these contracts drastically. And remember, if in Peloton stock does not move plus or minus 9.6%, your call options and your put options are going to lose value, which is very good for option sellers. So we're going to be choosing this $95 strike here. Pretty good chance of profit. It's currently $13 on the current stock price, and we're going to receive $118 of premium for doing this. So this is what I'm going to be looking to sell. Pretty safe option strategy and a quick $118 of credit that we're going to be receiving in just a week. So that's what's up with Peloton. We also got earnings for Salesforce and Snowflake, two really big cloud companies, cloud software companies. So Salesforce deals with customer relationship management, and Snowflake does a lot of big data out there. So we're gonna be watching earnings for these two stocks. Salesforce has kind of been consolidating within this past year. It's seen some really big growth the previous year, but then it's kind of been remaining a little bit flat late to mid of this past year. As we can see, it's been pretty flat, up and downs, but overall it's remaining roughly around $250 on pretty stable stock price. So if you want to play options on this, it's going to cost a lot to sell some puts. So doing some put credit spreads would be a pretty good idea if we can take a look at the premiums here. So you could do something like $10 out of the money, selling the 245, buying the 242.5 strike, and you receive roughly around $50 of credit. Pretty good strategy right here. Good chance of profit, 75%. And overall, that's what you would want to do. Obviously, if you have the capital, you could sell some cash geared puts. You can go for all the money, like a 230 strike. Really good chance of profit, and overall, a lot of money to be made there. Snowflake, same deal, but this has been pretty flat the past year, only up 8%. 8.5% ever since it went public in September of 2020. So overall, we're looking at Snowflake for a really big jump. And the good news is it's already had such a steep sell-off, especially with news reports from Cleveland Research saying that it expects slower growth. As we can see here, they're expecting 144% growth instead of 218%, which is a pretty significant slowdown. But we still have to realize that 144%, that's over doubling their revenue growth, which is still pretty good, and we're still pretty bullish. And even after the report, we can see that a lot of investors saw it as a nice dip, and it did shoot right back up, which is a good sign, especially since earnings is coming up. So playing some just buying out IRA shares of this stock is pretty good for the long term. We also got Dollar Tree and Dollar General. Dollar General moves a lot more than Dollar Tree, mainly because Dollar General isn't a dollar store unlike Dollar Tree. Dollar Tree, they have their products priced at $1, and with inflation rising, they're not making too much profit since the cost of goods are going up, but they're still pricing their products at $1 each. Dollar General, on the other hand, isn't a dollar store. They price their products at a few dollars. It's still relatively cheap, still discounted. So they're seeing some really good, better numbers than Dollar Tree. This has a lot more growth potential than Dollar Tree, as we can see here, which has been pretty bumpy, pretty flat, I would say. And Dollar Tree is going to be the one that you want to look at mainly for earnings. Our last stock is going to be XPeng, which is a Chinese electric vehicle maker, and they're planning on doing some really good things. They're planning to double their production capacity to 200,000 EVs a year, which is pretty significant. And overall, people are pretty bullish on the stock. All-time highs was around $72. It's had a pretty steep sell-off ever since, and it's been consolidating this past few months, as we can see here. So really good opportunity to sell some cash gear puts. If we take a look, let's calculate the implied movement. So XPEV, there is none for it right now, but we're gonna sell some out of the money cash secured puts on the stock. We could do something pretty far out, maybe like a $36 strike would be pretty good, which is $3 on the current stock price. You receive $83 of premium in just 1 week, which is not that bad. Really high chance of profit as well, and you're going to be able to buy the dip on the stock if it does end up dropping, because we're pretty bullish on it. It is a really good Tesla competitor, and especially if it comes to United States, Tesla's really going to have a run for the money, especially with how fast this company is growing their product line. So overall, really good earnings week this week. We're really watching Peloton, as well as these two cloud companies, CRM and Snowflake, as well as Dollar Tree and Dollar General, which has been doing pretty good. And especially since inflation is roughly around 5%, a lot of people are going to be flocking towards these stores in order to buy really discounted products. So that's about it. Thanks for watching.